And thank you so much to Dr. Jonathan Spiteri for that amazing message. Ladies and gentlemen, before we welcome our first panel discussion, I'm going to ask Mr. Jürgen Kritz to come and set the scene with a keynote on the future of Malta's financial services, raising the bar on quality, which will nicely lead and segue into a panel discussion on this topic led by Keith Sara from the Corporate ID Group. But first, please put your hands together and welcome Jürgen to the stage.
Thank you very much, Trudy, for the introduction, and thank you, Finance Malta, for having me and talking a little bit of AI and the impact of AI in financial services. So I want to start with a statement. What if in 10 years' time there will be no financial supervision needed anymore? Not because we forgot about it, that's not the reality, but because quality is built into the systems themselves. Artificial intelligence works in real time. It reports deviations before they even become visible. AI makes your processes faster and better. And as Henry Ford said, quality is the work you do when nobody is looking. And that's exactly what AI is about. And the statement was before machines were making decisions. And today, we live in a world where every time somebody is watching what we're doing, for example, there is an AI checking for loans, another one is reporting suspicious transactions, and a third one is deciding whether I get an insurance or not. And when we look at this, we need to ask the question, first of all, what can the technology do to support us? But we also have to ask the question, in regards to quality, how do we ensure that AI is making the right decisions? And we need to ask, how do we ensure that trust is built into the systems we are using in the future? And I think this is a huge opportunity, especially for Malta, because, it's not working? Oh, thanks. Because Malta is a small country with a very strong regulation. And I think this is the one advantage of Malta at all. When I look back in my career, so there are two things that really stood out. And they were barely communicating with each other in the past, and this is technology and regulation. And I started my career working in examining processes and systems, and the deeper I dove into it, I realized, okay, it's not about controls that make processes and systems more secure, it's more about understanding. And this is what we need to understand is we need to understand the system at all in the very deep. And that's when I started to build bridges between these worlds. And as a member of the German Economic Senate and a consultant to the European Commission, I tried to put that on another level, politically and economically, to support the process of technology in the future to become more safe, more transparent and trustworthy, and at least more humane. And technology and regulation, they are not longer opposite, they need each other. And that's what I'm going to talk about today. We see a map, and as I said before, and we heard before, Malta has its own culture, Malta has its own environment, and Malta at all is a small country compared to others. But as I said, this is the opportunity for Malta now. There is no competition in scale in the future, but there is a competition of clarity, agility, and international openness. And as a German living in Malta, I can say this is absolutely true. This is what I experience day by day. And it's not more about geography. We all know Malta is in the center of the Mediterranean, but Malta will be embedded in the future of European digital policy. There are some examples already. MDIA, they were amongst the first, not only debating about AI, they implemented AI. The MFSA is now going to implement regulatory sandboxes and opening up fintech hubs where startups can test their AI in a real-world environment and under ethical supervision. And at least, as Jonathan just mentioned, the Envision 2050, and I have to state this statement here, it's not about trends, it's about becoming a trusted model for value-driven, technology-enabled finance. And this is what Malta is going to be. And for me, what does Malta make so unique? It's the balance between the independence and being within the European laws, such as the AI Act. So AI is not only speed, it's also about quality. It's not only about automation, it's about responsibility. And if we look at AI, they make our processes better, faster, the quality is increasing. And what we have here is that compliance becomes more hardened. So we harden the compliance with technology. We stabilize risks, and the AI will definitely transform the way people are working. If we have a deeper look at the compliance, there will be a continuous compliance be established once the AI is fully running, meaning we are overseeing, we are monitoring in real time what's going to happen, like transaction. We're doing automated and fully supported KYC processes, and all of this in line with ISO norm, DORA, GDPR, and all the rest that's probably coming from the European Union and the governments. Risks become dynamic, no longer static thresholds. That means the AI is learning what's going on. They are overseeing everything in detail, what we're doing, and they will report anomalies before they even escalate, not after. And for the people, this is one of the important things that we need to talk about, is there is a shift from manual, repetitive work into a profile that's demanding judgment, empathy, and strategic oversight. And that's already happening. As said before, there's RegTech, there is FinCrime, FinTech, there is even ESG reporting and auditing. All of this is already happening, and we have that. And the result is we have less errors, better decision, and more transparency at all. But more autonomy does need a new kind of responsibility. We have to move from enforcing rules, and as somebody who's living in the south of Malta, I can just give you an example what that means. If you go to work in the morning, and you mentioned the traffic already, there's always these guys on the motorbike from the lesser. They stop you and then fine you for everything you do. That's right, but that's enforcing rules. And we are now moving, due to the shift that is happening, from enforcing rule to designing for integrity. This is the future. What will technology bring us? We are moving from audit after the fact to accountability by design. And we're not longer talking about compliance. It's more about trust, transparency, and ethics. And if we have a look at the regulatory complexity that we're currently facing, especially in highly regulated branches like finance, we can say these regulatory will not be able to scale. So we need technology to support us there. And AI is one of those that is going to support us, but there is one thing that we need to think about is AI cannot make decisions what is right. And that is something that we always have to think and keep in mind. Malta is walking in the right direction. And if we see these two pillars there, it's first of all about opportunity. Jonathan and George already spoke about it. And I can say that Malta has a strong framework, strong regulation, and proactive and a bold vision. But there is gaps. And we need to talk about these gaps already. Because if Malta want to become a front runner in AI, in finance technology, then we need to talk about that we need the tech talents. We need the compute power to run these technologies. We need governance standards that enable us to build explainable and auditable AI. And at least we also need to exchange with the powerhouses in technology like US and China, and an infrastructure that is able to build technology for scale. In saying this, looking at Malta, I think there is a great opportunity, especially in this regulation, and that's the opportunity to design the quality of technology in the future. Not as a checklist, not as an aftermath, but as a competitive edge. And Malta may be small, but it has the infrastructure, it has the vision, and the agility to lead, especially in this topic. So let's not aim to catch up, let's aim to set the tone, and let's shape the future. Thank you very much for this quick introduction to artificial intelligence, and if you want to stay in touch, just scan the code, or afterwards I will be there for the networking as well. Thank you very much.
Please have the last seat. Thank you, Jürgen. Please have the last seat. Thank you for your insightful presentation. May I ask for the first panel to join over for the first discussion, please. 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 Oh, I can welcome the podium. Please. Okay, John. Yes, okay, so thank you so much for joining us here today. I'm delighted to be hosting this first panel discussion following the first two presentations of this afternoon. I would like to welcome here on my panel Joe Zammitabona, Chairman of the Malta Financial Service Advisory Council, Kenneth Farrugia, Chairman and CEO of the MFSA, Kenneth Farrugia as well from Bank of Valletta, and John McIlwain, Senior Representative for Italy and Malta for the European Investment Fund. And Jürgen also joins us now for this panel following his thought-provoking and challenging introduction. I'd also like to take you back as well to the presentation on Vision 2050, since this has to lead, of course, the discussion over the next couple of days here. We've listened to a lot of important declarations centering around quality, resilience, sustainability, the big words that should take us forward. And I think we can all agree on this terminology. But translating this into action is obviously a whole different story. And this is what I hope to achieve from this panel and what I would like to see over the next couple of days. Even the sentiment I got from exchanging a few thoughts with you downstairs was that it is now time to translate things into practice. And the objective of this panel is precisely this, to discuss how regulation, how technology, how talent, how can all these things factor into the jurisdiction, into making Malta a true center of excellence, particularly in financial services. And given the provocation, let's say, by Jürgen in his opening comment about AI and technology taking over regulation, I do have to provide the right of reply to Kenneth from the MFSA and put the ball back now in your court and ask you, to which extent do you agree with this opening statement? How much will technology take over humans in regulation?
So, good afternoon. First of all, thanks to Finance Malta for organizing this great conference once again. I think technology and AI are the hot topics. Currently we're hosting the IOSCO GEM committee, which is the Emerging Markets Committee. And I think the two topics that are being discussed is how technology and product innovation are changing the whole spectrum of the financial services. I think AI and technology needs to be embraced. I think from an authority perspective, from a technological perspective, as you know, we're working on the supervisory case management system, which hopefully in 12 months' time, like this time next year, we'll be launching the authorization phase, whereby now we're moving practically in its entire totality into a technological system whereby all the process will be mapped, full audit trail, timings, etc. So no more submission of returns, clarifications, emails, whatsoever. So everyone will have his own account. You log in, you log your information, you submit. No repetition of information. So if you submit a document for another application, you have your profile. There's no need for another submission. So I think even from an authority perspective, we're working towards achieving more a technological approach. And also, currently, we are working on AI from two different fronts. One, AI, how we can use AI internally within the authority. There's a project which is currently being undertaken to understand how we can, make use of AI, especially to crunch high big data, especially rather than analyzing all the data with Excel sheets and so on and so forth. We use AI, which I think it's crucial, as all the industry, even the regulators, were finding issues and finding the necessary resources available out there. So I think we need to strike the balance between efficiency and also, through technological means, and I think here the human element, the judgment, needs to remain there to make the appropriate decisions. Apart from there, we're working also on coming with a supervisory strategy on how we're going to supervise AI, which is being used by our license holders in their normal course of business, because also AI and technology brings a number of challenges which needs to be addressed. Yesterday there were, I think, Visa and Revolut also, because we had the public conference on the side of the IOSCO meeting, whereby we had international regulators and also people from the industry. And I think all actions that are taken then brings new risks, and you fix something and something will crop up. So I think we need also to be prepared to have a regulatory framework which covers also the AI part, and that's also works in progress, and hopefully in 2026 we'll be communicating something in that regards too.
Okay, thank you so much, Kenneth. Before continuing this chat, I would like to ask the technical team now to point on. We have a special message by the Chief Executive of the European Investment Fund, Marjut Falkstedt, please.
Good afternoon, dear friends. I'm sorry I couldn't join you at the Finance Malta conference, but I would still like to share some thoughts with you on the notion of quality in financial services. As you know, the European Investment Fund manages financial resources to achieve public policy goals like driving innovation, competitiveness, and sustainability. We aim to make financing more readily available while ensuring that every euro mobilizes more resources. That's the first dimension of quality. The next dimension is closer to the products and services themselves. Can we ensure they are relevant and effective? In Malta, we teamed up with the government to put together a guarantee scheme that supports investments in energy efficiency, and it has been a huge success, generating 76 million worth of financing for more than 1,900 beneficiaries. That program brought together European national actors to achieve an outcome that was greater than the sum of its parts. And it required some adjustments to hit the sweet spot of quality that made it such a success. And there are other examples, like the integration of ESG considerations across our financial instruments, and the nuancing of green criteria to avoid greenwashing, or gender-smart investment criteria to push for greater diversity in the equity ecosystem. But the third, and probably the most challenging aspect of quality, is related to the way our products work. Can we ensure that they are as efficient as possible? Can we simplify them while maintaining sound financial management? Therein lies the greatest challenge. Part of ensuring quality is knowing when to push back, knowing when we are dealing with overregulation and the risk of gold plating. Let's not make perfect the enemy of the good. Our challenge is not to scale the peaks of quality through requirements and regulation. Rather, it is to strike the right balance and develop solutions that are accurate, timely, and cost-effective, while keeping the burden to a minimum. That would be the optimal level of quality. In small member states like Malta, the relevant actors can come together and drive an agenda that favors higher standards of professionalism and governance in the financial sector. Competing with the larger financial centers requires a compelling offering and a solid reputation. Quality. At the EIF, we stand ready to help in any way we can. Thank you.
Okay, so thank you. John, your turn now. Linking to the CEO's message, I'd like to get a better understanding from you. When we refer to elevating standards in the work we do, what is the EIF's approach in that regard? And secondly, I'd like to take you back to the first conversation we had a few weeks ago, when the issue we ended up discussing the issue of how we spend a lot of money on regulatory technology, and that's good, no one is debating that, but sometimes actually that is higher than the investment we put in actually having innovative products and services out there. Why is that happening, and what is the EIF's approach towards that issue?
Thank you very much for the invitation and the question. I think on the first thing, for those of you that don't know EIF, we act as the vehicle for policymakers, whether it's Maltese government or European Commission, to achieve their goals, where those goals can be achieved through guarantees or equity investment. And across Europe, we have invested some 160 billion and supported 2.2 million SMEs. In Malta, it's about 3.6 thousand SMEs just in Malta. So I think the first one we were discussing earlier I'm personally a big believer in thinking inside the box. So before we think outside the box, we should think inside the box. And that is listening to each other. We have many great partners like Banco Valletta, 2,000 or 3,000 fund managers and banks across Europe. We need to think to them, and that's what Mariut was speaking to there, when we need to simplify our standards, not gold plate matters. And when the legal regulations have got to a certain level, we don't need to go beyond those in order to facilitate our partners. So I think really the most important thing is listening to our partners and making sure what we require in quality is the right quality and hitting the right balance. The second thing, when we discuss, because Jonathan Spiteri, when we discussed the digital transition, if we look in Europe, we are investing a lot in digital transition, but 80% of the money in Europe invested in digital transition goes to compliance and internal information systems, which are largely supporting the compliance. Whereas in the US, and so that leaves 20% for the business and the products. In the US, it's 50% that they're spending on the business and the product. So really, when we look, digital transition is not just, okay, all spending on digital transition is good. We have to see where are we spending it, and is that going to be a solution that helps us close this gap that we have, a 20% productivity gap vis-a-vis the United States. Then, in terms of EIF, EIF is part of European Investment Bank Group. We recently announced a program, which is our largest ever tech program, called Tech EU. That's over the 3-year period, 2025 to 2027, 70 billion of investment to leverage 250 billion of financing in tech. And we as EIF, we're the part between the policymaker and the market participants. And it's our job to get that money into the system where it can have the biggest impact.
Okay, thank you, John. And I turn to Kenneth now. John mentioned the relationship with Bank of Valletta, so I have to turn to you now to ask you for perhaps some insights on how you managed to leverage this collaboration with the EIF to drive forward innovative solutions, perhaps mentioning some examples of your fruitful collaboration with the fund.
Yes, thank you, Keith. Good afternoon, everyone. It's a pleasure being here. for this conference. Undoubtedly, as John was saying, we have developed, both as a country but equally as a bank, a very long-standing relationship with the EIF, successfully deployed products in the market, financing solutions, on a risk-sharing basis. I mentioned the very successful Jeremy, its brother or sister, Jamie, with around 160 million take-up. So over these last 10 years, we've managed, through these risk-sharing arrangements, to launch these products on the market. Clearly, we shifted as well the focus towards SMEs and micros, and just late last year, we launched the SME Grow products, and we have a green permutation to that as well. And we're being a bit more emphatic now on the green dimension, because clearly there is an opportunity to transition operators to increase their investment in the green side. It's not binary. I'm pleased to say that today 15% of our lending is green, but I feel there is a lot more opportunity there. It just needs to be incentivized. And pricing is undoubtedly one of the factors that will impact the appetite for investors to consider investment in green. And clearly the interest rate has had an impact on that. So for the sort of brown investments, the rate is at 3.8, and for the green, it's 2.8. So there is a marked reduction in the financing cost. And I think we need to address, if I may use crudely the word, greed to green. So we need to address the greed side, which is the commercial dimension, the commercial angle, on reconciling the short-term investment requirements and the pains around that, because there is a financing cost, with the long-term benefits of investing in green. And I think these incentives absolutely go a long way to support companies to really give stronger focus to green. Beyond the relationship with the EIF, and we're nurturing that as we go along, we've also worked with the Malta Development Bank in Malta, and we've together launched a number of products. Not just limited to companies, but just yesterday we launched the third permutation of the Student Assist Scheme, because given that we're in knowledge economy, we need to ensure that we're also supporting the development of our human capital, which is so integral, to nurture the growth of the industry. And again, we're supporting the development of our human talent to support the organization. So I think we need to take a broader look. Can we do more? And that's the question we should ask ourselves, what next? And here I feel that from a regulatory angle, today, unfortunately, there is no distinction between banks investing and financing green projects or financing brown projects. So there is a big push to finance SMEs, to finance green, but when you look at the capital requirements, there's no distinction whatsoever. And I think the call from the banking sector is that we need to align our regulatory obligations on the banks with our objectives, to finance SMEs, to finance green projects. And I think this still needs a bigger push in mind.
Is that why perhaps there was some reluctancy by banks to approach that sector?
I think it's a combination of both. I mean, if you ask me as a sort of...
Can I still say reluctancy, or it's an unfair
I wouldn't say reluctancy. There were some limitations driven by regulatory capital that is required to finance certain SMEs where they don't have a strong balance sheet or they don't have collateral. So you're simply being driven by the cash flow of the project, particularly if it's a startup. So there's that risk dimension in terms of the impact on the asset quality of the loan book of the bank, or the deterioration driven by the investment in these. So there is that dimension. But I think the incentive side is missing. So banks today are embedding in their pricing model, and we have done that as a bank, where we give value to the green investment in a project by taking into consideration whether it's a LEED or BREEAM project, where we knock off 1% of the financing rate. And if it's not at that standard, we take into consideration the reduction in the carbon emissions, and there's a tiered level around that, and the more reduction in carbon emissions, the lower the rate goes for the borrower. So these are the incentives that banks have put forward on their own might. But I feel there is scope to further incentivize, this green transition. And capital requirements have a big bearing around that.
Okay, thanks a lot. Certainly a lot of food for thought there. The next part of the panel will focus on the competitiveness of the jurisdiction, and I'd like to take you back 3 years ago. I was present, and I'm sure a lot of us in this room were present for the launch of the financial services strategy. And I would like to ask to Joe then, what happened over the past 3 years? I speak with a lot of people, and you listen to what's happening, especially behind closed doors. A lot is happening, perhaps we don't always hear about it. So please give us a bit of a high-level update on those, gains and elements of this strategy which are now in development phase, particularly in relationship to Malta's competitiveness.
Okay, thank you very much. Good afternoon, everyone, and thank you, Finance Malta, for allowing me to be here. Obviously, the strategy document was actually launched some 32 months ago in March 2023. That document had 175 initiatives, and to date, I think we've actually completed about 66% of those initiatives. At this point, I would actually like, first and foremost, really to thank Kenneth Farrugia and his team, because this would not have been possible if it weren't really for his continued support. Whenever I'm in Malta, I'm at the MFSA premises more or less on a daily basis. So I do get tremendous support from the MFSA. Obviously, there's also a lot of other people to thank. There are 16 working groups. Obviously, and besides those 16 chairpersons, there are about another 120 people behind them. And again, I'd like to thank all those that are continuing to actually participate and help. And obviously, then we do actually have a program management office, which is led by PM Mus and supported by Bernice Buttigieg. They're the people that are really doing a great deal of the work and moving forward. I think that quite a lot of work has actually been completed, particularly, for instance, if we talk about the wealth management, the insurance side, family offices has come into play, and there's still quite a lot of work being done. So I think also, for instance, centralized identity management comes into play probably by the second quarter of 2026. There are some other projects which are taking much longer. For instance, the National Payment Hub. We've been at it for close to 3 years. The minister does want to actually privatize it, but we need to find someone who's going to be acceptable to the ministry and also the key players in that sector. There's also aircraft leasing, which is in its final stages of the drafting of the appropriate legislation, and then would actually have to go to cabinet and pass through the processes of making public the actual document and appropriate legislation. I think that there is quite a lot of work being done, and what we're trying to do now is really to, as we're coming up to our 3rd anniversary, we'd like to actually update that particular strategy document in the light of what's actually happening. Another important factor is where before we had fintech and artificial intelligence as one working group, we have actually separated artificial intelligence as a separate working group, and we're treating it as a horizontal enabler because it goes right across the key vertical pillars. And as such, I think in years to come, artificial intelligence will become a vertical pillar in its own right. But I think that there's still a lot of work to be done. Obviously, I think with regards to updating the strategy for March 2026, I'd like to get very much involved in the marketing side. I think whilst Finance Malta does an excellent job in participating in all the international events, and I have been in discussion with George and Kenneth, and also the Minister of Finance, is that I'd like to actually bring more potential investors to Malta, rather than actually trying to approach them from abroad. I think we need to try and actually get these potential investors to our island to see for themselves that everyone is very much accessible. And besides actually working, there's a lot more that Malta can actually offer. I think recently, from the 15th and 17th of October, I did actually get some 12 family offices down to Malta, and the majority of them had never been here before. I think we did make some 6 presentations to them whilst they were here, and they did actually work. But then, obviously, on the Friday, I did actually take them to St. John's Co-Cathedral and the Grand Master's Palace, and they were sort of blown over, really, what Malta can actually offer. And I think one of them has already actually is in discussion with an accounting firm to do something here, and 2 or 3 of them haven't also indicated they'd like to retire here. So I think by getting people out here, they're able to actually taste Malta for themselves of what we can actually do. So with that, I think I certainly would like to actually link up with Kenneth and George to try and actually organize about 4 events in 2026 on particular subjects. I'm also in discussion to bring in about 2 lots of 18 family offices, one in June, another one in October, and also another group of 40 people with another potential person to bring about 40 family offices down to Malta again. I think we're likely to succeed much more in getting people to invest into our island once they actually can see it for themselves of what we can actually do. There's still a lot of work to be done. I think as far as the profession, both lawyers and accountants, I think we need to actually continue to work closer together. We have actually been working closer together. We need to do much more than that. We need to pass the same message all along, so it's getting through out there. And I've no doubt that this will be achieved.
Okay, thank you so much for this update. John, back to you. Just we've mentioned a lot the need for quality and especially value added. The Maltese economy has grown rather strongly over the past years. So now we're in a situation where we're saying, listen, we need growth to focus more on the value, on the high value added side. From your experience, I'm sure that you come across a lot of sectors across the continent, even though your focus, I understand, is on Italy and Malta. Which are the sectors which you would say are delivering, let's say, at least potential rather than actual value, but at least where do you see the potential going in the years ahead?
Thanks for the question. I'm going to have to disappoint you, though, I think, in the sense that, well, as they say, making predictions is difficult, particularly about the future, right? And I wouldn't know which others. I think what we can see is a vibrancy in the European scene that's incredible. If you look at plenty of people in this room wearing Oura rings, that is now a 7 billion company. Vinted, which I don't know how many people use Vinted. Vinted, the second-hand clothes marketplace, 7 billion valuation. In Italy, if we look at it, at a sector that is having a real resurgence, life sciences, we just saw the largest ever Series A financing for a drug company, which has got an innovative treatment for heart failure. Heart failure is the #1 cause of hospitalization in the US for the over 65s. Yeah. So that was a Series A financing, but who knows where that can go in the future. So that's technology, wearable technology, second-hand clothes, life sciences. We don't know. Of course, defense is super hot at the moment, maybe for unfortunate reasons, but 3 years ago, we had a facility of 175 million to invest in defense funds. We had 3 funds in the pipeline. Now we have 60. So that is clearly a sector that is exploding. I think we as EIB Group would remain convinced that amongst all this, the strong secular themes, if you like, remain the twin transitions of climate and digital. And particularly on climate, that will be 50% of the group's financing. And for those of you who let's say are aware that in other parts of the world they are doing less on climate, let me say I think that this, we are convinced, is the source of our competitiveness. If you look at the the CEO of NVIDIA recently raised the specter of China overtaking the US on AI. They're overtaking on AI because they their cost per unit of data is about half the US. And why is that? Is because China is leading in renewables. So it's their electricity and energy costs. So if so, climate transition is
The linkages, yeah,
is directly linked to competitiveness. But I think maybe taking a step back, I think from what we would say as EIF, probably the most important thing, if you look at sectors, and what we were celebrating this morning, PEVCA joining Invest Europe, is venture capital. If you look at venture capital, typically, I mean, we don't have the reliable figures, but it's between 1 in 1,000 or 1 in 2,000 companies get venture capital financing. If you look at the Mag 7, 6 of the 7 got venture capital financing. And I think we're pretty confident that Microsoft would have done if they had needed the money, right? So there is no question that venture capital has some secret sauce that drives innovation for the benefit of the economy. That is beyond a question. Then when you look at how do we achieve that, there is also a very, very clear correlation between, let's say, VC-backed companies per million of inhabitants, as a metric of how VC-intensive a company, and the engagement of institutional investors in that in the VC market in that economy. In other words, you need to get the pension funds and the insurance companies and the banks into VC if you want to have a vibrant VC economy and thereby creating the future Mag 7 or European equivalents. And I think that is the sector. Let's say the future focus should be really 100%. How do we mobilize institutional investment into the sector?
Okay, thanks a lot. Jürgen, I'll turn to you, please. Yesterday, we were all aware that in the afternoon, quite a lot of sites around the world were down, including airlines and so forth. To be honest, I haven't yet seen whether this was related to some cybersecurity incident or otherwise, but it shows our dependency on anything tech, and that when tech fails, everything else goes down. In your experience as a cybersecurity consultant, how critical, I mean, I know it's stating the obvious by saying that cybersecurity is important for financial services firms and jurisdictions, but do you think that firms actually realize the centrality of, because up to a few months ago, we've seen cybersecurity attacks on major firms around the world, so it's not like everyone is doing it. So there's still, why is it still not yet enshrined in something obvious, as I said?
To be honest, we're very grateful in the branch of cybersecurity that it is more to the awareness of the people now. What happened yesterday, I mean, these are leading companies in the field of cybersecurity. Nearly every institution is using these tools. And that means, like a couple of weeks ago when we had the AWS down, which means nearly 80% of the internet goes through those servers. And to be honest, I mean, I was shocked when you were mentioning 80% of the investment is going into compliance software. I mean, I myself, I do regulation tech, but that fundings are going into being compliant with something. I mean, we missed the opportunity to invest into something that is bringing us forward and bringing the industry forward. And I mean, this needs to be the investments that need to be focused on. So purely my opinion in this, and especially in these tools of cybersecurity, because like every company is working with IT, every company is dependent on this, and this is the major security we need to ensure, especially because we're dealing with other people's money. We're ensuring certain, so we're in a critical sector, so to say, which is very, very heavily involved in everyday's business. So, I mean, this needs to be a number one investment at all. And as you said, like the majority is going into big companies. That means we're dependent from big companies. And if they go down, as we saw yesterday, as we saw a couple of weeks ago, then the internet is down. We can't do any services. Yeah, so we are not able to sell. Like yesterday, I just received messages from clients of us in Germany. They were saying they lost a couple of million euros just yesterday because their sites weren't reachable. And nobody's now going to Cloudflare and saying, listen, we want the money back that we lost due to no service available, right? So for me, we first of all need to be aware what are the risks, how do we manage the risks in our companies. That is something everybody has to do as a homework, first of all. And then we really need to make sure that the most critical services are not depending on only one supplier, so that we also can switch between these. And I think this is, there's certain things we need to do to think about and how to be resilient with all these risks that are all around. Yeah.
Okay, thank you so much. For the final part of this panel, I'd like to bring the discussion now to the issue of talent. Now, when we speak about talent, probably you'll tell me, but on every panel we've been, on every discussion we've been in the past months, we've always, discussed talent. But I think it's practically the elephant in the room. I mean, you cannot have a discussion on the future of financial service and not address this big issue. I'd like to start with you, Kenneth, on the issue of people and the lack of human resources. How did we get here? I mean, from your experience in the private sector, how did we get to a situation where we have such a lack of talent in a situation when we're moving towards a digitalized industry? And what can we do to retain the good people? Because we speak a lot on attracting talent, but perhaps not enough on retaining the talent that we have. What are your views on this?
I can tell you that in every conference I've been over the past, I'd say 5 years, the issue around the availability of talent, but more than that, it's the ability to retain talent as well, because we tend to really focus on how we attract talent.
Yes.
And we tend to dilute the focus and effort we need to retain talent. Well, look, if I look at our organization, but look at the number of customers that I meet, during the course of my employment with the bank, one of the things that I really notice is the absence of investment in technology. And I can tell you sometimes when you ask customers, what's your investment budget in technology? Which is driving re-engineering of processes, the reduction of human capital from what I call value-destroying work to work which is value-creating. And sometimes you get blank faces, really and truly. So, we haven't seen this and I can tell you this is across different sectors, including the banks themselves. And now, AI, I believe, will induce this significant paradigm shift. And we're already seeing the value of that. And more than that is the versatility of artificial intelligence in inducing operational efficiency. And I would add in meeting the instant gratification of consumers today, of customers. Because today, there is that instant gratification mindset. And I think those companies that will invest in technology will reduce operational costs, will reduce the need for human talent, but will also meet customer expectations. If I may add, I think when one looks at the issue of talent, we tend to limit ourselves to the need to retain talent by looking at just the narrow focus on remuneration packages, whether it's the fixed salary and the variable component. But I can tell you, and this can be measured today with Net Promoter Scores and the works, that you need to look at the wider wellness of employees to retain talent. And I know that some companies, and including our bank, have invested heavily in that. And that is measured by not just the Net Promoter Score, but looking at the attrition rate, right, in terms of your key talent and whether the talent is gravitating, outside of your organization, worse off to competitors or to other sectors, because there is a hunt for talent. The reality is that we complain about the absence of talent, but I don't see the commensurate level of effort and intensity to reduce the dependency on at least that level of human capital that is required today in the organization. And that probably needs to be incentivized. We need to encourage more AI-driven companies to expose the solutions that they can provide to organizations, and there are quite a number around. And as one expects, the proliferation of AI is bombarding companies with AI solutions companies that are knocking on their doors to provide solutions. So due care needs to be given in that particular space. One last point, because undoubtedly AI will clearly induce operational efficiency and better customer experience. Nonetheless, one needs to ensure in the use of AI that there is a proper governance structure around that. And that is before venturing into simply embedding AI in operations or in decision models, one needs to ensure that these are not black boxes. And one needs to assess the dependency of that, linking to what was said earlier on resiliency, right? Because the focus now is not really, as we migrate towards the digital arena, is not only about ensuring that you're managing your risks, but the focus is more revolving around how resilient you are to get back up again. Right? And that should be the focus. The human in the loop remains imperative, and we will still need humans to run businesses, right?
Yeah. And the human remains in the loop, Joe. So how are we going to get these people? What is the strategy of the MFSAC, and also linking with the labor migration strategy?
We're at a bit of an early stage. Obviously, that we do actually have human resources and education working group. And it hasn't been easy. This is led by David Delicate and assisted by Maria Kaukidalia from MIA. We are in discussion with the National Skills Council, and Identity Malta have agreed to actually sponsor a particular study which we're in the process of carrying out at the moment. This is actually going to be done by the University of Malta. They will be submitting some 50-odd questions, a questionnaire of some 50 questions, which should be going out, I think, within the next week or two. And this report should be actually more or less completed by January 2026.
That's good.
So that's where we are at the
We
moment.
should have an update then later on.
I think we'd have an update then, yeah.
Yes. Kenneth, from your end as well, I believe that you were involved in the revision or the creation of the HQP scheme. Can you give us a bit of an indication on what should we expect? What's the deal around that?
So I think from an HUP perspective, I think we worked with MFSAC, with Mr. Josam Tabon and all the team on various matters, and HQP was one of the initiatives also that we had to update. But rather than just updating the consolidation version, which is still, I think it was in consultation and we're concluding, hopefully in the next 2 weeks. We launched like 6 weeks, 2 months ago, the HQP for family offices, which was one of the main areas that the MFSC was working on to launch family office regime. Practically, as part of the family office regime, we launched the notified PIPs, limited partnerships, and so on and so forth. So we gave them the wrapper of family offices. And we topped up that with the HQP for family offices for single, multi, and also for back office and treasury management. So that was launched 2 months ago. Apart from that, we worked also with not Identità, on Residenza Malta, to link also residency with family offices. So anyone setting up a family office structure in Malta will also be eligible for a residency permit in Malta. This was approved through all the channels, also through Cabinet. We're working with Residenza Malta to issue a notification, hopefully in the next 2 weeks too. So practically, what we tried to do is to link the whole ecosystem towards a family offices regime, which caters for also through the highly qualified professionals regime, by providing any individual supporting family offices working here in Malta with a flat rate tax of 15%, and over and above also the owner, the UBO of that structure and his family will be eligible for a residency permit here in Malta.
Okay. That's all for this first panel. Thank you for all the panelists for actually being very concise but yet practical in their answers, which I hope will give the audience and the fellow speakers on this conference, more food for thought to encourage further discussion. I look forward personally to seeing the updates early next year on the strategy, because the strategy is something which is alive. It's not something which is done and cast in stone and stays there. It's something which keeps being updated. So lots to look forward. Thank you for your attention and have a nice rest of the afternoon.
Thank you.
Money-based business is a powerful solution for local and international businesses, powered by an award-winning technology. Manage all your company finances from a single platform. Our promise is to open your business account within 48 hours. Create multiple wallets and set payment approval flows for different users. Make global payments. And manage your company's liquidity via a wide range of investments, including bonds, treasury bills, funds, stocks, and ETFs on 40 exchanges. Our real-time reporting helps you save time so you can focus on running your business. As always, we support you 7 days a week with our ISO-certified human customer service team by phone or live chat. Apply now on moneybase.com.